We're going to start off with the absorption rate. As you can tell here from this graph, the first quarter of this year, we were experiencing a very strong surge in buyer demand relative to the number of properties available in our market. We increased from about a 17% absorption rate on up to just under 23%, just under 24%, excuse me, in April, with 25% indicating a balanced real estate market. So we were very close in April to experiencing a balanced real estate market. However, since the first-time homebuyer tax credit expired, we had a huge drop-off in buyer demand in May, down to 15.7, and we stayed at about that same rate here for the next 3 months now into July. So the buyer demand has really fallen off, and the number of sales have also dramatically decreased in our area. I'm predicting that we're going to see a continued decrease here for the remaining part of 2010. We could get down as low as 12 or 10% absorption rate for the DC metro area, indicating that only 1 out of every 10 properties that are available for sale goes under contract over a 30-day period. That is a very slow market. That is a very strong buyer's market, and I'm expecting to see those market conditions here into the fall and into the winter until we approach the spring of 2011. Next, I'm going to be talking about the days on market, the amount of time that it takes to sell a property in our area. As you can tell from this next graph, we're actually selling properties faster than we have in the past 3 years. Right now, the average days to sell a property is about 60 days, and that is very close to where we were in 2007. It took a lot longer in 2008 and 2009 to sell properties, indicating that maybe we are in getting closer to a balanced real estate market. Properties sold much faster in 2006 and in 2005, but we are rebounding somewhat on this market measure, much closer to the normal 60 days, maybe 45 days to sell a property, as compared to 95 days, 3 months plus, both 2008, 2009 timeframes. So this is an indication that we are approaching a balanced real estate market. All right, the next market measure is the number of sales. This is a measurement of the real estate activity in our area. And as you can tell here from this chart, recently the number of sales have really dropped off. I'm looking at the brown line on this chart. The sales activity from February 2010 until June of 2010 just really skyrocketed up, with average home sales exceeding the numbers that we were putting up in 2007, 2009, and 2008. So we were on a pretty clear path to rebound and get into a much closer balanced real estate market and more sales occurring in our market area. However, in July, we dropped 27%. And again, I think that may be in large part due to the expiration of the first-time homebuyer tax credit. I think a lot of those sales that were occurring in April, May, and June were a result of that earlier incentive, and those sales have now closed, and we're experiencing the drop-off of that activity here in July. I'm expecting the number of sales here to continue to be between 600 and 800 on average for our market area throughout the rest of the year. I don't see them dropping much more than that, and I'm expecting a surge of activity again in the spring. But until then, I think the real estate market will continue to show signs of slowing down, with less sales happening from now until the spring of 2011. All right, lastly, I want to talk to you about the sales prices, the sales price in our area. Market values have surged as a result of the first-time homebuyer tax credit. Earlier this year, we've seen an increase here actually since January of 2009 of 17% to last month in July 2010. Particularly this year, we had a lot of sales activity. The result was an increase in property values as buyer demand surged. But now that that tax credit has expired, the demand has subsequently dropped dramatically. The number of sales have also dropped. And I expect that we're going to start to see lower price points later this year and into early next year with the drop in demand. So although home prices have gone up quite a bit, we're approaching price points that were in our market in 2008. So we've made up some of those losses that we've made last year. And I'm hoping that they'll hold somewhat, although I'm concerned that they'll be flat and maybe decrease somewhat until the spring of 2011, where buyer demand will hopefully pick up again in the spring. So expect home values to remain flat for the rest of the year, early next year, or perhaps decrease in our areas until the spring of 2011. All right, so in summary, to my buyer clients out there, show some patience. It's a great time to buy. You can get a great interest rate. It is going to be challenging, particularly if you're attracted to the lower priced homes. Those are going to be your short sale properties. Some of them may be the foreclosure properties, the bank-owned or REO properties. It takes a lot of patience to go through one of those transactions. They typically take longer, and we don't use the standard language that we would if it were being sold directly from an owner or a resale, a traditional sale as we refer to it in the business. So read those contracts carefully and go in knowing that it may take a lot of time. But again, it's a great time to buy, but you do have to show some patience. To my seller clients out there, I recommend holding off on selling unless you absolutely have to at this time. The spring and into next year would be another chance for you to perhaps catch that buyer demand and sell your property quickly and for a little bit more money than you can right now. It's going to be a slow fall and a slow winter with property values remaining flat and maybe decreasing in some of the areas. Also, with the latest economy news, things tend to be a little stagnant right now. I think that will also impact the real estate market and keep buyers from purchasing properties here in the fall and the winter. To my tenants out there, it's a great time to find a place to rent. There's a lot of owners who would be open to renting it right now. There's a lot of opportunities out there for rentals with apartment complexes, a lot of opportunities out there for you to find something nice at a reasonable rate. To my landlords out there, there are qualified renters out there. Just do your due diligence, research, make sure that you bring on the correct tenant. You want to make sure that they have obviously the qualifications, the financing to justify the rent. I would focus more on income and not so much past credit history, as most Americans nowadays are experiencing some form of credit issues. Maybe credit scores should be de-emphasized somewhat when you're looking at your ideal tenant, but instead focus on long-term income, job security, things like that. Hopefully you'll find this information helpful. Give me a call. I'd be happy to help you in any way I can. I'm experienced with helping buyers, sellers, short sales. I help with rentals. I also help find rental properties for tenants that are considering finding something to rent in the area. I'm licensed in D.C., Maryland, and Virginia, and my doors are open. My phone line is open, so call or email me if you have any questions. All right, take care. Have a wonderful rest of your summer here, and I'm excited about football season. I'm excited about the fall, and hope everybody else is too. All right, talk to you soon. Bye-bye.